Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 394 on September the 26th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Richtech, Robotics Inc., Class B common shares, Quantumscape Corporation, and Riot Platforms. And we discussed three new trades on Webull Corporation, NIO or NIO Inc., and Peloton Interactive. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. markets finished the week nearly unchanged. The Dow Jones Industrial Average lost 67 points, ending the week at 46,247 points. The S&P 500 index lost 20 points, ending the week at 6,643 points. And now it's time for the topic of the week. The topic of the week is right-sizing your trades. Every now and then, people will ask me how big they should trade. What they really are asking is what volume of options they should trade. The answer is always, it depends. There are two factors that should affect your trade size. Number one is how much money are you willing to lose on this particular trade? Sometimes people will base a trade on how much money they think they can make. I don't care if it looks like it's a 10-to-1 risk-reward ratio. That does not mean that you should trade 10 times your usual size. I base the volume of trades on the amount of money or capital that I'm willing to have at risk on any particular trade. The second factor is how much money I have in my account to trade. Now, you might be willing to risk more money if you have $100,000 in your trading account instead of $1,000 in your trading account. That should be pretty obvious. Now, I could throw in other variables like how much knowledge do you have of options. Still, that matters less to me than making sure that you only risk the amount of money that you're willing to lose on a particular trade. If you stick with consistent risk management methods, you will likely survive in this game a lot longer than the guys who are taking the 10-to-1 return ratio trades. Trading options and trading spreads on options makes risk management so much easier. You can quantify your maximum loss and size your trades accordingly. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with the cover call on Richtech Robotics Inc., Class B common stock. Symbol R as in Romeo, R as in Romeo. At the time, the stock was trading for $4.44 per share. I looked at buying stock and selling the October 5 call at 60 cents. That could give us a return of 26.13% in 4 weeks. Well, shares of Richtech lost 24 cents, ending the week at $4.20 per share. The call option we sold did not change in price at all, leaving us with a net loss of 24 cents if we were just to close out the trade immediately. Now, even though the stock price is lower this week, the price per share is still well above our break-even point. The stock had a super volatile week, getting as high as $5.71 per share at one point. So I'm still a bit bullish on the stock and the trade overall, so I don't plan on making any adjustments at this point. I'll obviously have to keep track, closer track even, of the stock over the next 3 weeks. Next up, we have the credit spread on Quantumscape Corporation, symbol Q as in Quebec, S as in Sierra. At the time, the stock was trading for $13.41 per share. I looked at selling the October 12-11 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread. Now, shares of Quantumspace lost 74 cents, ending the week at $12.67 per share. The out-of-the-money put spread that we sold is still out of the money. The stock still looks bullish to me, which means I still like this trade. I chose a lower strike on the trade at the time of entry because I figured there was a chance of a little bit of a pullback. Still, the stock price is more than $1 above the break-even point, so no need to make any adjustments on this trade either at this point. Let's just see how the stock does over the next few weeks. And then our final trade for review is the debit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $17.44 per share. I looked at buying the October 16-17 call spread for 63 cents. That could give us a maximum gain of 37 cents, or that's a 58.73% return in 4 weeks. Now, shares of Riot Platforms grew 26 cents, closing at $17.70 per share. The in-the-money call spread that we bought is now even more in the money. With the stock price heading higher, this trade is working out as planned. Clearly, no adjustments are needed at this point. And of course, it's important to keep track of the stock until expiration and have a plan for what you'll do to either lock in profit or avoid a loss. So that's it for the trade review for last week. All new trades on today's show will use the October 17th expiration for monthly options. We're going to start off with our covered call. I'm looking at Webull Corporation, symbol B as in Bravo, U as in Uniform, L as in Lima, L as in Lima. The stock ended the week at $15.17 per share. I'm looking at buying stock and selling the October 15 half call at $1.60. That could give us a return of 12.72% in 3 weeks. Now you enter this trade by buying stock for $15.17 per share and selling the October 15 half call at $1.60. This trade makes the most money if stock prices finish above $15.50 per share. The break-even price on this trade is $13.57 per share. In real terms, the stock purchase will require $1,517 and you'll collect $160 for selling the option. Next up, we have a credit spread on NIO Inc. Symbol N as in November, I as in India, O as in Oscar. The stock ended the week at $7.02 per share. I'm looking at selling the October 7 6-half put spread at 21 cents. That could give us a maximum possible loss of 29 cents per spread. Now you enter this trade by selling the October 7 put at 41 cents and concurrently buying the October 6 half put for 20 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $7 per share. The break-even price on this trade is $6.79 per share. In real terms, you'll collect $21 per spread that you sell and have $29 at risk. And our final trade on this week's show is going to be a debit spread on Peloton Interactive, symbol P as in Papa, T as in Tango, O as in Oscar, N as in November. The stock ended the week at $8.56 per share. I'm looking at buying the October 8.5 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return on capital in 3 weeks. Now you enter this trade by buying the October 8 call for $1.03 and concurrently selling the October 8 half call at 70 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $8.50 per share. The break-even price on this trade is $8.33 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. It's kind of a fast one, but that's kind of how the cookie crumbles every now and then. I hope you guys are enjoying this September, enjoying a little bit of volatility in the markets, and hey, keep your eyes open because we're just about to enter Q4. So I hope you're ready for the end of the year. I am. I'm not ready for the year to end, but I'm ready for everything that the stock market's going to bring in Q4. So let's go out there and make a little more money. I also am going to have some things changing, adding to the show a bit. I have a little bit of a book that's going to be coming out and actually a new community that I'm going to be building tied to said book, all for the weekly options. So it's time for a little growth, right? I'm approaching my 400th episode. Thank you guys for any of you who have been listening. Let's say if you have listened to all 400 shows, I feel like I should buy you something. I don't know. Let me know. If you have been listening for 100 shows or 25 or something like that, like we might have to maybe I'll book some t-shirts. Do you guys like t-shirts? So anyway, clearly I'm just running my mouth here. Thank you for listening. Just expect some things to happen in the next few weeks as I wrap up writing this little bit of a book and get started marketing that. It's going to bring more people to the show, more people into the community, and we're going to have a community chat. It's going to be awesome. I am looking forward to the whole thing. This is why I've kept this show going the whole time, and I can't wait to bring it to fruition. So thank you guys for going along with me on this ride. I hope you have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.